Good morning, everybody. It's Thursday, August 29th, 5:26 a.m. Central Time. Grain markets are mixed this morning. December corn futures up 0.75 cents at 391 and a half. November soybeans up 9 1/4 at 986 and a quarter. December Chicago wheat down 4 1/4 at 537 and a quarter. December Kansas City wheat down 1 3/4 at 554. December spring wheat up 2 1/2 at 586 and a quarter. Let's start off with this China story.
So, China is proposing restrictions on imports of barley and sorghum. The proposal is Beijing's latest attempt to reduce domestic oversupply and improve prices. During the first 7 months of this year, sorghum imports nearly doubled compared to the same period last year, with the U.S. accounting for 80% of the total imports. Earlier this year, China implemented restrictions on corn imports due to an oversupply. Even with that restriction, corn inventories at the country's southern ports are near their highest level in 2 years. Chinese corn, sorghum, and barley prices have fallen to their lowest levels in more than 3 years.
Which which hated government entity are you to believe? China. Part of me says that this is exactly what China would say before they start importing a whole bunch of corn, right? Like
Right.
they're known to not necessarily be totally truthful when it comes to these sort of things. USDA has indicated that the Chinese soybean import program this year will be the second largest on record behind last year, and that the corn import program will be the second largest on record, tied with last year for second. They imported more in 2020. 2021. So I don't know. I mean, all the evidence would suggest that China has no interest whatsoever in U.S. corn, and that their interest in U.S. soybeans is minimal relative to what you would typically see. This is not necessarily a news story. I suppose we probably do have some sorghum producers watching, and this is maybe not the best deal in the world for them, because China and the export market is a big deal in that market. So I don't know. I mean, you got China saying one thing, you got USDA kind of indicating another thing. The I think most of the data would indicate that China's corn crop is really good. I know they had some flooding, but a lot of it was outside of corn areas. So I don't know. You can believe who you want, but in any case, China has not bought a single bushel of U.S. corn for new crop delivery, and their purchases of soybeans are way behind where they typically would be. So for the moment, I guess the China narrative is the one that makes a little bit more sense here. And keep in mind, a lot of these imports, this is from all destinations. A lot of this is going to come from Brazil and not from the U.S.
Canadian wheat production is slated to be lower than previously estimated. According to Statistics Canada, the country's wheat crop is expected to increase by more than 4% this year to about 34.4 million metric tons. Analysts had previously projected the crop at 35.1 million metric tons. The lower estimate by Statistics Canada is due to hot and dry conditions. Global ending wheat stocks have fallen for 5 consecutive years and are expected to decline to a 9 year low during the 24-25 season. Unfavorable growing conditions over in Russia have contributed to the decline.
I believe that yesterday's Stats Canada report was responsible for the, I guess I'll call it a rally in the wheat market. Prices popped when that news came out because the number was a little bit below expectations. I've got the stocks to use ratio chart for the world, global stocks to use ratio on my screen here. Yeah, it's going to be the tightest since 2014. The problem with global wheat pricing and just wheat pricing in general has been Russia and their flooding of wheat to the world at very low prices. Canada is not, they're a big wheat producer, 35 million metric tons, 4.4% of global wheat production. The bigger issue is exports, where they are the third largest exporter behind only Russia and the European Union. They're going to account for about 12% of all global wheat exports. So this is a story, and I wouldn't be surprised. The weather in Canada was not cooperative at all as it relates to spring wheat production. I wouldn't be surprised if that number came down a little bit more in future reports. So it was enough for a one-day rally in wheat. We're kind of mixed here this morning. See if we can build on that today.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video with Brian Split?
Brian was on yesterday. We did charts. I'll keep this short and sweet. Brian has been extremely accurate in his take on long-term trends in corn, soybean, and wheat prices for months. And what he did yesterday was laid out his thoughts as we move forward, and kind of gave us a time frame and some pricing in terms of like where the bottoms may occur. It's been as accurate and as good as anything that we've put out for a long time. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. There's no other fee, no other obligation. Nobody will try to sell you anything else. You can cancel it anytime. It includes our morning email, which goes out every single business day at 5 a.m. Central. We've got a new premium video every day. Our all of my cash grain marketing recommendations are included here. Give that deal a shot this morning, guys.
The USDA has approved the production of GMO wheat. Argentina based BioSears Crop Solutions produces the drought tolerant grain trait known as HB4. The wheat is herbicide resistant and is unlikely to create an increased plant pest threat. The U.S. is the fourth country to receive approval to produce and commercialize the grain. Brazil, Paraguay, and Argentina have already received clearance. According to the U.S. Wheat Associates, approval of HB4 will benefit both farmers and consumers.
So I would venture to say that GMO wheat results in larger yields and bigger crops. Is that actually what we need? Is that actually what the farmer needs? I mean, one of the ways, from a microeconomic standpoint on your farm, one of the best ways to reduce production costs is to increase yields. But from a national standpoint, we don't have much of a demand base for wheat. We don't have the export demand base that we used to have. So we're going to the problem with all of our markets right now is that we've overproduced and the demand base isn't there. So is this going to push us further toward overproduction in a U.S. wheat market that is really just a residual supplier to the world at this point? Maybe it does. I don't know. Let me know what you guys think.
U.S. imports of used cooking oil have surged and are anticipated to continue to rise. Due to the boom in the biofuels industry between 2022 and 2023, used cooking oil imports increased 240%. Year to date, the U.S. has imported about 1 million metric tons of used cooking oil, with China accounting for 60% of the total. The European Union imposed tariffs on Chinese biodiesel imports last week, causing more used cooking oil to flood the global market. The move is expected to increase U.S. imports of Chinese used cooking oil. The EU tariffs were implemented due to suspicions of fraudulent used cooking oil imports. U.S. farm organizations and lawmakers have raised concerns over the same accusations.
So the story is that I think the EU tariff thing is the story. And because the European Union doesn't want this stuff, they're just going to ship more of it to the United States. We've talked a lot about this in the past. It's not necessarily a super fresh story, but the deal is that the way that this stuff is gauged, the carbon footprint, I know a lot of you guys have a lot of issues with that. I do too. Used cooking oil is otherwise a waste product, and therefore its carbon footprint is lower than alternative biodiesel feedstocks such as soybean oil and canola oil. So even when you take used cooking oil from China, put it on a boat and ship it halfway around the world, it still somehow has a lower carbon footprint than U.S. soybean oil. Yeah, I have questions about that too. Chuck Grassley and a bunch of other senators sent a letter to Biden in June asking for some sort of take or answer to this problem. The EPA is conducting an audit on at least 2 renewable fuel producers here in the United States. They didn't say which ones. So they're taking some sort of action. So the European Union tariffed used cooking oil from China. Who's your tariff man that could be in office, in a few months? Trump. But, at the same time, so if Trump tariffs used cooking oil from China, I mean, is that good for renewable diesel production and soybean oil? Yeah, maybe. But at the same time, if that happens, China probably comes back and starts enforcing again the tariffs on U.S. soybeans. So I don't know. Pick your poison. None of it really sounds that appetizing to me.
U.S. ethanol production declined last week. Weekly output of 1.07 million barrels per day was down 2.5% on the week, but up 2.2% versus the same week last year. Ethanol stocks were pegged at 23.6 million barrels. The print was down marginally compared to the previous week, but up 3.4% compared to the same week last year. Implied gasoline demand was up 1.2% compared to the previous week and up 4.5% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 1% compared to the same period last year.
It's a good number. Its numbers should continue to be good with corn cheap as it is. Margins are going to be good. Ethanol is projected to account for about 36% of all demand for U.S. corn during the new crop marketing year, which is pretty normal. The problem is that we're not really expanding capacity in any real meaningful way, and that underscores the need for sustainable aviation fuel and more ethanol use via sustainable aviation fuel. I know you guys have a lot of different opinions about the pipeline and the controversies there, but we could certainly use the additional demand.
USDA reported multiple flash sales yesterday. U.S. exporters sold 10 million bushels of soybeans to China for delivery during the 24-25 marketing year. Exporters sold 4 million bushels of corn to Colombia for delivery during the upcoming marketing year. U.S. exporters also sold 7 million bushels of corn to Mexico for delivery during the upcoming marketing year.
So we are selling soybeans to China, which is considered to be routine or less than routine business, given the numbers. Again, frequent, but not the quantities that we really need to see at all. We'll have some updated export sales charts in the video here tomorrow. What did cattle do yesterday?
They were mostly lower. Feeders were 65 cents lower to 20 cents higher. Live cattle were down $1.42 to 25 cents lower. Box beef lost significant ground yesterday. Choice ended the day at 307.29. That was down 4.68, and Select ended the day at 297.63. That was down 2.62.
U.S. dollars up a little bit. Stocks are up a little bit. Bonds are close to flat. Gold's up $17. Crude oil is up 17 cents in the October WTI at 74.69. Have a great day, guys. We'll talk to you on Friday morning.